we've created an asset bubble in crypto out of nowhere. And now we have to do the hard work of figuring out what the real supply demand is in the economy.
Hey guys, welcome back to the channel. Today we have billionaire investor Chamath on the future of the economy and financial markets. Chamath says that people are being fixated by chart numbers without understanding fundamental statistics. The GDP can still positively go up, but only if the percentage goes up by at least the same amount as the previous quarter. Chamath has been waiting to see how many quarters it will take to return to an on-trend growth system. America has been trying to find its balance for the past 5 quarters, and what stable economic growth looks like is unknown. Let's check out Chamath on the All In podcast as he shares his concerns about America's financial imbalance. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
I think you just summarized it. People are really fixated on these numbers without understanding basic statistics. So just taking a step back, if you go to the Bureau of Economic Analysis, which is an official website of the government of the United States that posts GDP, the title makes it pretty self-obvious what we're dealing with here, which it says, Nick, you can put it up there. Real GDP, the percent change from the preceding quarter. So things can still go up positively, but still be negative if it doesn't go up by the same or more than the quarter before it. The thing that we really have going on is that over the last 8 quarters, we've had all kinds of very turbulent data that's made the trend line unpredictable. And the most obvious way to see this is actually in one specific subsector, which we'll get to in a second, which is around US e-commerce adoption. You see this one huge spike coming out of nowhere, and then eventually everything has settled back to trend. The same way, I think what we're waiting to figure out is how many quarters does it take for us to get back to on-trend growth in the economy. We had a massive shortfall in Q2 of 2020. We had a massive surplus in Q3 of 2020. We've had a country that's been getting back to finding equilibrium over the last 5 quarters. So we don't really know what the steady state growth should be. This is why I specifically had such an issue with the tone the White House took, which was trying to explain away that this isn't a recession by trying to create doubt in the definition. Instead, I think it would have been much better off just repeating what I just said and explaining basic statistics and actually showing that the country is headed in the right direction, largely speaking from a really crazy one-time externality that nobody could have predicted, that it's going to take some number of quarters. And so really what you should look at, and Jason, you've pointed to this, is employment and wages, and try to be a little bit more circumspect and overreacting to any one quarter of data. By the way, the Fed exactly just said the same thing yesterday when they raised 75 basis points. They said, we are not going to give guidance anymore because things are too turbulent. We're going to remain vigilant on inflation, but mostly we're going to be very near-term data dependent. So I would boil all of this in saying, let's not overreact to a quarter's print here or there, and specifically the label. I think the White House made a mistake in trying to basically think, we all didn't understand what a technical recession was. I think instead we should just focus on what we have to do to get back to solid state equilibrium.
Chamath goes on to say that insecure financial conditions have been distorting what supply and demand actually looks like. A plethora of government money has been put into the hands of the people who use it to engage in the public market. There has been a large amount of purchasing activity, which has been bolstered by an alleged endless store of money. Now that money is being removed from the equation, no one knows what real equilibrium economic growth looks like.
It's not all of it, but the point is,
it's some combination of lockdown and
excess money, right? Excess money because of loose financial conditions distort what true supply and demand should be.
Got it.
Right? And excess money can come from the government, but in this case, excess government money went from the government into the hands of individuals who then participated in the public markets, and they distorted what it all looked like. And so there was a lot of purchasing activity that was propped up by what seemed like an endless supply of free money.
Right. So we look at, yeah, good.
And so now that money is getting taken out, we don't yet know what the real equilibrium economic growth rate should be, because you have to remember, we have not seen an era without federally introduced spending, without federally introduced forms of quantitative easing since the great financial crisis. So we have been propping up our economy for 14 years straight now. So we have distorted the prices of bonds and fixed income. We've distorted the prices of equities. We've created an asset bubble in crypto out of nowhere. And now we have to do the hard work of figuring out what the real supply demand is in the economy. Typically, the yields of long dated bonds go down. Okay. That essentially tells everybody else to reprice assets. What does that practically do? It makes the cost of borrowing roughly cheaper, okay? It makes the price of equities, particularly ones that are far out on the risk spectrum, so specifically let's focus on NASDAQ and crypto, right? Tech stocks, biotech stocks, and crypto stocks go up much more aggressively. So what has Powell effectively done? He has synthetically created a form of easing again, right? Like his job at the Federal Reserve, if you think about the money supply as a pipe, it's to shrink the pipe to close off demand to get things in equilibrium. So even though he's doing this, by the language that he's doing, he's effectively allowing market participants to basically guess that the worst is over and now we're going to start to expand the pipe again. And so they go to the end state. So what he effectively did in one speech is basically put a pin at the end of this year and is telling the markets, I'm mostly going to be done. And if anything, I'm probably going to be cutting in the back half of 23. Go on your merry way. It's now pushing the problem out another 8 quarters. Like, we need to stop this nonsense. He needs to be definitive, and he needs to fundamentally break the back of inflation so that you find out what the true demand is in the economy. We've never in the history of America ever had CPI print above 4.5% or 5% without inflation being brought down by having Fed funds not also be greater than 4.5% or 5%. So at some point, inflation will turn over and we'll print 6 and 7%, but that's still not below 4.5% or 5%. And right now, our target Fed funds rate is between 2.25 and 2.5%. So we could still be only 50% of the way there if inflation remains at 4 to 5%. And this is what I think market participants don't want to hear. They don't want to hear that there has to be a meaningful form of tightening. And politicians don't want to hear that. The White House for sure doesn't want to hear it. The problem is that if Powell caters to too much of that feedback, he's not going to do what he's supposed to do and why he's put in that job.
Chamath says that because long-dated bonds normally decrease, this prompts people to reprice their assets, which causes the cost of borrowing to become slightly cheaper and causes risky equities like crypto stocks to go up more aggressively. Jerome Powell has artificially created a new form of closing off demand to bring the economy back into balance. Chamath says that Powell needs to take action and radically break the back of inflation and discover the true economic demands. Chamath notes that never in America's history has there been a CPI print higher than 5% without the Fed's reserves not also being greater than 5%. What do you guys think of Chamath's take on America's dire financial circumstances? Let us know in the comments below. Thank you so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.